Hey, it's Heidi Hawkins here with HeidiHawkinsRealEstate.com and Coldwell Banker Realty in Bethesda. I just wanted to take a moment and sit down with one of our lender partners, Hillary Cochin with Main Street Home Loans, and wanted to share some information that has come available in Maryland. Hillary, what programs are available in Maryland for down payment assistance or first-time buyers?
Yeah, you bet. Thank you so much, Heidi. I love, as you know, working with first-time home buyers. I know you do as well. And one of the reasons for that is because our area is pretty first-time home buyer friendly and that there are ample programs out there. Usually we find, right, one of the largest hurdles in that first home purchase is cash. We live in an expensive area here in Maryland, so saving up is usually one of the biggest hurdles that most of us face. So the exciting news, if you haven't heard already, is that there are ample down payment assistance programs throughout the state of Maryland. Some are more county specific, but most of them run throughout the entire state. And it's all different types of down payment assistance. So primary takeaway is the minimum down payment for all loan programs is 3% of the sales price. If you're using something like FHA financing instead, it's 3.5%. But you have awesome programs out there, such as the Maryland Mortgage Program, that will offer down payment assistance funds to help cover that.
So do I have to be a first-time buyer to use some of these programs?
You actually don't. And that's a question we get quite frequently. I can't give just an easy answer to that. It really depends on the program. And some of the rules change, but for the most part, if you have not owned a property within the past 3 years, that's the magic number for us as a lender for loan programs to consider you as a first-time buyer.
So, what are some changes or aspects of these programs that I need to know when I'm preparing to apply for some of these programs?
Yeah, and what I would say, and this is my opinion, but I would say the qualification requirements are actually relatively lenient. So, for example, when you are using something like the Maryland Mortgage Program, there are maximum income limits based on household size that vary based on the county that you're purchasing in and also how many people are going to be in your household. So for perspective, if you are looking in, let's say, Montgomery County and you are a household of 3 people, right? Maybe it's a couple and a kid, something like that. The maximum income limit has recently increased to about $199,000. So if you are earning below that 199 threshold in Montgomery County, as this first example, you will qualify for the program based on those requirements. The only other big requirement I would say, which is sometimes a little bit more of a hurdle, is the minimum credit score requirement is a 640. So Heidi, I'm sure you agree, but when we get introduced to a client and you are not yet in the position to buy and that we have to work on credit or saving up more or limiting debts, don't hesitate to reach out to us because we can at least help, especially on my side with credit. We can give you feedback, doesn't cost you anything, on how to get to that 640 threshold if you're not there quite yet.
That's really great to know. Um, as a buyer, do I have to pay this money back if I use one of these programs?
Great question. You do. And that's for now. And again, I'm always a little bit nervous to give easy answers to these questions because sometimes new programs come out within, for example, within the Maryland Mortgage Program or within some of the counties where they are true grants. But almost always, and especially for the programs that are out there now throughout Maryland, it is not free money. It is money that you do have to pay back. And usually the time when it triggers the repayment is going to be when you no longer own this property as a primary residence or if you pay off the mortgage. So the easiest example of that is if you are buying this property and our hope right now, right, you may have heard interest rates have been going up. Our hope is that we will see them come back down. We don't know if that's a year from now. We don't know if that's 3 years from now. So our hope is that every client who's purchasing a home today, they get to secure that home at a lower price. And then we're going to look for money saving opportunities through a refinance should rates come back down. So when we are refinancing the mortgage, for this example, the down payment assistance funds are due back to the program.
What can I do to get started in one of these programs?
I think it's easier than most people expect. Just like the normal pre-approval process, everything is done with the lender. So I will say You have to be an approved lender to work with these programs. But honestly, if you're talking to someone local and reputable, most of these local companies, including my company, Main Street Home Loans, we are licensed with the Maryland Mortgage Program. So you go through, as the buyer, you go through that pre-approval process just like you would for any other mortgage. There are going to be a few extra items that we need. As an example, we are almost always going to need 3 years of recent tax returns. That's basically how we prove to the program that you haven't owned a home within that time frame. But that's really it. So we lenders, we do the heavy lifting. We give you a heads up on the qualification requirements. If you're close to the income limit, we'll make sure you're aware of that so that if you get a raise, we know how that may impact your ability to use the program. But it's pretty simple, and there is going to be a home buyer education requirement. I get this question quite frequently, but you can do that after you're under contract on a home. So it's online. It's not one of those like all day in person seminars. You certainly can do that, but it's pretty easy.
Now, one of Hillary's superhuman qualities is being able to put together numbers and spreadsheets. And I know she has some information she wants to share.
I do. Yeah. And we could set, so if you're watching this and you want a copy of this, just, drop your email below or send us an email directly and we can share this with you. But this is what we try to put together for our clients because we want to make sure that you guys are comfortable, especially as a first-time home buyer. We want to make sure you're comfortable with the whole process, including the mortgage, ideally before you even start house hunting. The big thing is we want to make sure that we're, Heidi especially isn't showing you properties that maybe we say you can qualify for, but for whatever reason, you wouldn't want to spend that much on a mortgage payment, whatever the case may be. So just so you guys know, once you do the pre-approval, this is the kind of information that we go through together. It doesn't cost you anything. Again, it shouldn't take you too much time. But I think it will be a big help as you start really thinking about what properties you want to consider. So in this example here, and I'll try to zoom in a little bit because I'm sure it's small. In this example, I'm basically showing you as a hypothetical buyer two different ways you can structure a mortgage. So in this example, I'm going to assume that you are renting and you're paying right now $1,700 a month in rent. Again, I mentioned this a little bit earlier, but if you're not using one of these down payment assistance programs, but you're using what's called a conventional loan, the minimum down payment is 3% of the sales price. So in this example, if you're in Montgomery County and you're purchasing let's just call it a $200,000 condo, I'm going to assume condo fees are somewhere around $400 a month in this example, but we know those can range quite a bit. If you're purchasing a $200,000 property with room for a $400 condo fee, you're looking at a payment of around $1,853 a month. The amount of cash you need at closing is going to include things like your down payment, which is the equity you're walking into the property with, estimated closing costs, and lastly, setting up your escrow account for prepaid taxes and insurance. So a $200,000 property would actually run you close to $17,000 needed out of pocket at closing. So a lot of us, we hear that number and we're like, oh my goodness, $17,000 is a lot of money. And you are right, it is. So we have these programs. This one that I wanted to highlight today is a program. It's been released a handful of times, but it only comes out once a year, and it's for Montgomery County specifically. The cool thing about this program is that it offers, while funds last, up to $25,000 in down payment assistance, which you can use towards your down payment and or closing costs. So this same property, a $200,000 condo, what you're going to see that we did here is that because $25,000 is so much money, we reduced how much money that you're borrowing from us on the main mortgage by using a portion of that down payment assistance to make a larger down payment. And we're also getting creative. If you look here, payment breakdown, you're going to see in this second option, there's no mortgage insurance as part of your monthly payment, because instead we're just having you with that assistance money buy it out as part of your closing costs. So you're using a little bit extra more, right, of that down payment assistance money, and you eliminate that from your monthly payment altogether. So main highlights here with this program, you can get into the property for virtually the same payment because you are going to see a higher interest rate. When you are taking down payment assistance, it's always going to come with a higher interest rate than if you're making your own down payment. But For this little bit of a difference in your monthly payment, you're walking into the home with about 16 grand less cash used out of pocket. So it's really, really cool. If you looked at these numbers and you said, you know what, I'm still fine using something like $17,000, well, then you just keep going higher on down payment. So now your payment in this third option here, your payment's even lower, $1,763 a month for virtually the same amount of cash as a traditional conventional loan. So it's all really cool stuff. And again, if you guys are toying with the idea of buying and you feel overwhelmed, these conversations we always love to have. You know, something just to flag in this presentation down below. Just keep in mind when you rent, right? A lot of people freak out right now about things like interest rate, which is legitimate. I understand that. But when you're paying rent, in a way, you're paying 100% interest. You're not building net worth. You're not growing equity in anything. So this same property, this example, if you're using something like this Montgomery home ownership program, 15 years from now, you're talking about over $200,000 in more net worth than if you kept renting at $1,700 a month. So some perspective there, some magic numbers, as you said, which you know I love, but all exciting stuff. I love this program. You know I get excited. I know you do too every time this comes out every year, and there's a lot of other ones too. So
wonderful. So thank you so much for sharing that. And how can folks get in touch with you?
Anyway, cell phone, I have a 917 area code, 917-685-5437. You can email Heidi and I, drop a message below. What about you, Heidi? What's the best way to reach you?
So you can text me 202-256-8939. You can also drop a message below, or you can go to my website, HeidiHawkinsRealEstate.com, and I can match you with Hillary if you aren't able to get in touch with her right away.
Awesome. And I will say, just from my perspective, I know I mentioned before that as lenders, right, you have to be approved to use these programs. But for all you prospective buyers out there, working with a realtor, Heidi specifically, working with a realtor who has, a good understanding of these programs and how they operate, we work as a team. It's going to make your process so much smoother. So Heidi, can't speak highly enough about you and your work. So appreciate you always.
Likewise, feeling is very mutual. Well, thank you so much for tuning in, everyone. And if you have any questions, feel free to reach out. Thank you so much.
Thank you.